I like this. Okay, so I want to kick this off. I'm going to talk about myself because I'm a lawyer and that's my nature. And what I want to do is I like to curate my remarks to the audience. How many here have been in the insurance procurement process for any line, not just cyber? Anybody raise a hand? Okay, we got some people. How many people have had in their contract that they need cyber insurance and that's an imperative to do business? Most of the people. How many people are just here because they're cyber curious? Ah, those are my people. I like it. Okay, so this is me. I love when I put a picture of myself when you can see me right here. What I want to do with my background is qualify what I'm saying. So I'm an attorney by trade, practiced in New York City for 9.5 years, did litigation. Then I went over to the insurance industry. And they started writing a product called cyber at the company I was at. And I really, really enjoyed it. It was something new, different, and as a young person in the industry, you could really get ahead. But I hit an inflection point. I couldn't keep up with helping my insureds through their incidents because I didn't know the technology enough. So I pivoted, and I went to consulting. I was general counsel at Kibu Consulting, which is a DFIR firm, among other things. I was involved in procuring crypto, reporting to FinCEN, negotiating with threat actors, helping companies on their worst day get back up and running. I then pivoted over to Booz Allen. So I was not just dealing with smaller companies, but maybe some of the most complicated large companies in the world. Through their cyber problems, doing tabletop, doing governance. And I really got a perspective of what it's like to be the victim of cybercrime, whether it's big, small, or medium company. You have the same problems, right? And what I wanted to do is take that perspective and bring it to the insurance market because I think there's a gap. And right now, what I am is an insurance broker. And what I do at Woodruff Sawyer is I work with our clients, and I hear your tale of woe. I understand your security posture, your governance, some of the problems you have. And we take that and we make the insurance work for you through me drafting policy language, through negotiating with different carriers. We're your advocate, and that's sort of our bread and butter. Quickly, Woodruff Sawyer, we're a broker. We focus on tech. We're Silicon Valley based, and our cyber practice is sort of different. We have in-house attorneys who really do help with GRC and governance, which if you're going to go IPO, it's a very important thing to have. Particularly on cyber, it's something that is becoming a big negotiating issue. Okay, so what I want to do is start telling you the story of how cyber insurance came to be. And everyone here is allowed to make fun of me. I made this slide myself, and marketing did not help. And if anyone has suffered through an attorney's talk, this is the best an attorney can do. There's limited words on the page. So early 2000s, that's really when the cyber product came to market. And its design was, and the thought behind it was, okay, there's all these .coms, and what they're doing is transacting business online. They have risk. They went and they started looking at the PCI risk. They started looking at the transactional risk, and they came up with a product that solves some of those problems, giving them a risk transfer. And it was just like your traditional insurance. It was a piece of paper, and if something went wrong, you got money, right? Then things continued to evolve. Late 2003, we got one of the first breach notification laws. And that, my friends, is where a lot of the money, if there is a breach, comes in. This is a turning point and where the market was maturing. I put in here the term breach coach was 2007, not because it really matters, but that is the point where there was customization in some of the legal services that was provided. There became a specialist. So you could see, It's starting to mature. The breaches are starting to come in. If anybody was in security in the late 2000s, all the PCI breaches, right? They started to uptick. And I was in claims at the time. I had to learn all about card brands, looking through the merchant agreements. It was good stuff, good times. I want to draw your attention to, and there were a number of big breaches, right, in the 2013-14. This was an eye-opener for the industry because before that time, cyber insurance was printing money. There were very few breaches. So they were taking in premium, and they were building up the ability to offer more. Sony, Target, Home Depot. I happen to be on every single one of those from a claim standpoint. It really opened up eyes, guys, about how much exposure is really out there, what really needs to happen, how to be more efficient in providing services to companies who are victims of breaches. It was a turning point, but I will tell you, the biggest turning point for the industry and a true inflection point was not Petra WannaCry. And let me tell you why. I don't think the idea that a worldwide cyber event affecting many, many companies, we understood that it could happen, but we've never seen it come to fruition. This is in the industry what we call a CAT event, or catastrophic event. You see it with a hurricane or a superstorm. The idea and the understanding of it was out there, but this was different. And what we saw is a refining of the policies and a refining of how we went to market. So you saw more exclusions coming in. You saw an awareness of war, cyber warfare, and how that operates in an ecosystem. One of the biggest events that started to change not just our understanding, but the way that we go to market and the way that we operate with our insureds was the proliferation of ransomware. Everybody remembers that summer in 2019 when there was a whole bunch of entities in Texas that get hit all at once. And everyone's like scratching their head, like, how did this happen? Was it a coordinated attack? No, they all had the same managed service provider, seeded ransomware through. It was an eye-opener. But that event started the summer of ransomware. We saw frequency uptick. We saw demands start creeping up. Fast forward to 2021, 2022, we're seeing demands for $40 million on the regular every weekend. Not just small companies are getting hit for $10,000. We're seeing full encryption events. We're seeing companies that need not just help with the breach response, but help recovering, because they're losing millions of dollars by the day. And there's a whole bunch of fear on the corporate side because they weren't prepared to respond. They didn't have the wherewithal or the technical expertise necessarily to deal with a ransomware event. And quite honestly, the insurance industry wasn't quite prepared for it either. What we got was an understanding that, yes, we've made a promise, we're going to pay these claims. You have a $40 million ransom event, we can't negotiate it down. You have a right to claim that, and we will back you. But what the insurance industry started doing was something that we like to call active insurance. So figuring out ways that we can, one, underwrite and select the risk in a better way. Demand that companies have certain controls. Take all this data that we have and figure out what are the root causes? What are the common causes? What actually prevents this? And what sort of things can we start looking at that are common deficits that lead to a large ransomware attack or a business email compromise or a cyber event, whatever that event may be? That's what we like to call the hardening market. So they charged more. The application went from 2 pages to sometimes 100 pages. And they scrutinized controls. And that's a maturity thing. The other thing we saw is underwriting teams started to offer something more. So it wasn't just scrutiny. It was, as Tiago talked about, scanning, partnerships with different EDR providers. We started to see endorsements where you get a premium discount if you implement this. This might be EDR, it might be a PAM solution, could be anything. And it was a way to encourage companies to be more proactive. We saw things like free ransomware tabletops. We saw discounts on incident response plans, because what the insurance market started to understand was that it's not just about a silver bullet control. It's layered defense and resilience. Companies are going to be impacted. That is, like death and taxes, cyber events will happen. But what they started to understand was that certain companies were more resilient. Certain companies had a disaster recovery plan that got them back up and running way quicker. Certain companies had a business continuity plan. Certain companies had a digital twin. Certain factories could run offline. So they were limiting the amount of exposure on the tail end and taking cyber attacks that were very frequent and limiting the severity, which is key. What I will say is that the focus on understanding ransomware, understanding the drivers of certain types of attacks, understanding which controls and which security solutions actually work, and implementing that and recommending it to policyholders matters. And the market shifted again. So we saw a hard market where you might have seen a 300% increase the amount of premium if you had the right controls and you were resilient and you showed governance, the prices started coming down. And I would tell you, I was on the underwriting side in 2022, and that December, it was like a sea change. Everything started to click. And what we see now in 2024 is frequency is holding steady. For smaller companies, particularly ones that are showing resilience, the severity is blunted. It's really not as severe. And what we're finding is that there are certain things we can implement and work with our policyholders to make them better and give them more. So it's not just a piece of paper like it was in the early 2000s. It's designed to address the risk. And then it's also designed to limit frequency and severity. So it's less of a transaction, and it's now a partnership. Now, I'm going to talk a little bit more about who people are in the ecosystem. Because I came here yesterday, and I was talking to some folks about their understandings of cyber insurance. And one gentleman came up to me, and he said, well, you sound like just a vendor. I was like, I've never sold anything in my life except an argument. There's not a misunderstanding, but there's a lack of knowledge in who plays what role, right? So the broker, I'm the broker. I am the client or the policyholder. I am their advocate. In many ways, I'm like their attorney. I will read their legal documents. I will come and understand them. And then I will take all that understanding and I will go to market. And my goal is to get you the broadest amount of coverage possible for the least amount of money. That is my goal, and that's the sign of a good broker, right? Be able to talk your language, not just your CFO's language, but security language, and be able to translate that to a group of underwriters who are selecting you as a risk. So the market is broad. There's anywhere between 60 and 100 markets that I can go to, depending on what your controls are, what your appetite is, and bring you the best information to make a business decision on how much you want to insure and who you want to partner with. Tiago is from Coalition. They are an MGA, which is just a fancy way to say an insurance carrier. What I would say is they're going to determine the policy terms. They're going to have a policy that's meant to cover cyber risk. It will have a variety of different language. In fact, there's no standard language. So it's something where, particularly in a soft market, or in a softer market, there's room to negotiate. There's room to cultivate language that works for your company. And there's not just one. There's many. So that's what the insurance carrier does. But they also do a bunch of other things. I'm going to talk about it a little bit more. There's an incident response panel. And a lot of people get very stressed about this. These are folks that handle not hundreds, thousands, year over year of cyber events. And they're not here to fix your environment. They're not here to sell you something. Their primary focus is to get you through the crisis. And they're very good at it. They've seen hundreds, thousands of environments, configurations, technical problems, different threat actors in environments. The attorneys, the breach coach that I mentioned, they specialize in not only privacy, but also they're very technical. They know how to work with these teams. They understand how different threat groups operate, and they understand the back-end problem, which is notification, what information qualifies as data that requires a legal notification, and what those implications are, and how to run an investigation that gets you the results you need to fulfill all of your legal requirements. So these are true specialists. And a lot of people go in and they say, yeah, but I'm very comfortable with company X. And I understand that as a broker. What I want is what you want. But what I will tell you is the incident response panel, whether it's Coalition's in-house incident response panel or a firm that they regularly do business with, these are true specialists, SMEs, and they're going to be able to do it better, quicker, and more efficiently for you to get you back up and running, which is the end goal, right? We're not here to pick favorites. We're here to get the business back going. Now, let's pivot for a second, because I want to talk about, I gave you a lot of context. I gave you a lot of history, and I gave you who's who. Let's talk about why the insurance market needed to pivot to active insurance. Let's talk about 2019, 2020. Now, there's a lot of numbers on this page, and I would want you to focus on the direct loss ratios that are over 100%. Do you know what that means? They were paying out more money than they were taking in. Now, some of these numbers are skewed because some of the providers there aren't really providing cyber insurance. They're providing an endorsement. And they're included because this is the state insurance fund, and that's what they aggregate. But the interesting thing is that if, in order to continue, they had to do something better. They had to do something different. They had to adapt and evolve. And what I'm offering to you is that working with your cyber insurer, your cyber broker, your incident response panel can absolutely make you more secure. And here is why. Here is the evolution. Let's talk about one of the problems. There's a problem that there is an evolving crime ecosystem. It operates much like a corporation does. It's well-funded. They can outsource things. They have great tools. They have playbooks. They have HR. And I will tell you, you can't just be a passive person in this sort of ecosystem. You have to have threat intelligence. You have to have a view into this ecosystem. And you have to fight fire with fire. One of the things that the insurance industry has done is they partner with a company called Dark Web IQ. Has anyone heard of them? Yes. Well, you partner with them. Of course you have. And let me tell you a little about this company, because the beginnings of this company are in the insurance industry. Now, what Dark Web IQ does, and what your insurance carrier who partners with them and pays for their services, or your insurance broker who partners with them and pays for their services does, is it gets into the ransomware ecosystem. And they do what's called a ransomware disruption. So what this company can do is monitor. They've been doing it for years. They have a partnership with the DOJ and the FBI, and they have aged identities. They can get deep into the conversations of these threat actors. They know whose information is compromised, and they're looking out for you. They have a list of your affiliation with insurer X, and because you bought this policy, there's someone looking into the crime ecosystem, looking for your access being sold, and going in and disrupting it. They will buy that access, and the threat actor, the access broker, doesn't know the wiser. This is an example of the creative thinking, the fighting fire with fire, that is part and parcel what active cyber insurance actually is. Now, I talked a little about EDR discounts. They are very real. I've seen up to 50%. That, for a small company, could mean the difference between getting it and having it properly configured and being able to sustain it versus it being unaffordable. Now, we already discussed in the last panel what an effective tool it is, and we've seen it with the thousands of data points that we have over a number of years. One of the other interesting things is there's an insurance carrier out there that has their own EDR solution, and for a small company, they package it with an insurance policy. So not only do they provide you EDR and SOC solution, they'll package an insurance policy on the back. So they're betting on their solution working. So there are many creative things that can be out there for you, small company, large company. One of the interesting things I'd like to highlight is a client of mine who has coalition insurance was informed of a problem on his attack surface. Now, he has an attack surface management company that's looking over him and his supply chain. And he said, they notified me 2 days before the people I'm paying for of the problem, and we went and we fixed it and we were not impacted. And it's amazing that they're using things that are getting ahead of paid services. So this is the promise. These carriers do not want to go down. They know they have to pay claims. I will tell you as a lawyer, they can't wiggle out of it. And if I'm doing my job as a broker, we have contract certainty. You're getting paid. But they don't want to, they could blow up a whole company with the kind of losses if they continued on 110% combined loss ratio. They are incentivized to work for you. They are incentivized to be creative. And the more you work with them, the better your company can be. Now, let me give you a couple of examples. How many people here have a little bit trouble getting budget? I can't do this amazing thing that I need to do. I can't get the product I want. I can't get the CFO to understand the gravity of the problem, right? Well, at no cost, depending on who your carrier is, depending on who your broker is, you could get your executive group, your board, your CFO, whoever the problem is, to do a ransomware readiness briefing. And I will tell you, I like to call it, you ever see Scared Stupid, where they take people from jail and they scare kids into not becoming criminals? It's a similar effect. We get some people from the trenches real DFIR folks, and they talk about what happens to a company when they're impacted by ransomware. They talk about where the problems lie, what tools are effective, what behaviors, like resilience behaviors, right, are needed to thwart one of these attacks, to recover quickly from one of these attacks, to not have, CFO words, large financial losses. Okay, I will tell you, this is not a technical thing. This is an executive thing, and the CISO gets the budget after these type of calls. So there are things that are available to you as a persuasion tool, but I will also tell you, there are things that are available to you that are what I'll call coming to Jesus or a reality check. You have your security program, you think you're so good, you think you have everything down. What you're doing by taking your security architecture, posture, resilience to market is you're getting a whole bunch of what is people who understand triggers of breach, taking a look at what you've done and saying, I'm not going to bet on you, or your risk is okay, you could do better here, or wow, you're doing a really good job. You're going to get broader coverage, or we'd like to see more here. And for you as a security professional, someone who may hold the responsibility for a security program, this is a valuable tool. This is a way to mature. Because what's available now? Benchmarking, right? What is benchmarking? Benchmarking is just, what are my peers doing? Well, if they have tool, maybe I should. That is not a good way to do anything. You know, doing something your neighbor does is not necessarily the right way to do it or the appropriate way for your company. What an insurance company does is tell you if you're a good bet, if you're a good risk. And that is what is available. So my thesis and my argument to you is insurance is not this adversarial thing. It's part of what we like to call a resilience program. You have your people, your processes, technology, and then they all come together to form a defense. When everything goes wrong, your insurance will come in and solve your problem, and they could be embedded in your people, process, and technology. I have more on the insurance industry. I'm happy to talk about a cyber market update for you nerds who are really, really into cyber, talk about some of the stringent underwriting, where the market's going. I'm happy to talk about where underwriters like to focus. I think it's really important. Please take pictures. As a broker, these are my favorite things to talk about, pitfalls. You know, out-of-box solutions aren't for you. Let's talk about things to avoid. There's a lot of them. You can get me on LinkedIn, happy to talk you through it. But the purpose of this discussion and what I want to offer to you and invite you to ask questions about is this is not a static piece of paper. This is a partnership. You go through a process, you work with your broker. We will bring you to market a variety of partnerships. Choose the right policy, choose the right partner, and maybe they will help you avoid a breach, blunt a breach, or become stronger. Yeah, I'm good. Questions? Please come up to the microphone, and thank you for the applause.
Thanks. Those are great presentation. I think we've seen some cyber startups, cyber insurtech startups like Coalition, Cowbell, Appe. Could you talk about maybe kind of the need for the next wave of these types of new neo carriers and new types of proactive insurance carriers in the space?
So the market, in order to be competitive, needs capacity. Right now, there is a lot of capacity in the market. And what that means is the more competition among different carriers, be it a startup, be it an old brick and mortar, be an MGA, somebody new, the more creativity and competition. The more competition there is in the insurance market, the better able I am to get you exactly what you need and put them against each other to provide the best solution possible.
Okay, next question. Are we ever going to hit the point where when a data breach happens, besides just getting a year's worth of monitoring, we'll get something like a 1Password or password manager? Because really some of the root of the problems at home is related to people clicking on things and being stupid at home just like they are at work. But the reality is if we had password managers and the company gets breached and it goes, hey, guess what? Included in our breach is passwords, that would be handy.
Well, I'll tell you, there are a couple of things that they're doing. It's not necessarily providing you a technical solution for passwords.
Yeah.
They're going to risk select around you if you don't. What they're going to do, and I think one of my colleagues from Marsh is going to talk a little bit more about this, we're doing studies on not just technical things that either lead to a breach, more what are some of the indicators in the dark web, i.e. Stolen passwords, stolen access that lead to it, and what can we do, just like Dark Web IQ, to solve this problem. So I think what you're going to see is more preventative and more in-depth than just, here's a widget, apply it, good luck next time.
Hello.
Hi.
Do you think that we'd ever see this become mandatory, like car insurance, and seen as a public good, and in order to benefit the normal people who get caught up in these things and sometimes are badly affected?
From your lips to God's ears. No, I think I don't believe in necessarily legislating around the problem. I think the market, as far as the commercial market, is going to become so intense that you can't do business without it. And we're seeing maybe larger companies not buy cyber insurance because they think they can take it on the balance sheet and then really, really, really deeply regret that when they are impacted. So I think from a commercial standpoint, B2B, it's going to become imperative. I think for public companies or large companies, the board is going to drive those decisions down. So if they have a material event or a large-scale event, they have some sort of balance sheet transfer and process for that. One more question.
Oh, I'm the lucky one.
You folks can get me afterwards, absolutely.
Quick thing, you referenced the incident response panel and agree that there's some companies and experts within that area. The question and concern I have is that these experts don't necessarily have a great understanding of your environment. I guess what recommendations do you have, or how big of a concern is that?
I would say a medium concern. If you're a very complex, dispersed environment, if you're a manufacturer with plants all over the world, that's not going to work for you. They're not going to understand your DR, your internal. But for a smaller company, they're very well equipped. And what I do I don't believe in out-of-the-box solutions. I believe as a broker, you need to listen to the problem. And if your concern as my client is that I need my people, they understand my environment, it's complex. Maybe I have a lot of OT, and I need someone who can do OT forensics. Maybe, I don't know, maybe I hold a lot of data somewhere in a very secure place, and it's, I don't know, it's protected by DFARS. You don't want certain people going through that. What I would recommend is talk to me about that. And I'm going to ask you those questions. And then I'm going to work with the carrier to get an endorsement, to put that on your policy so you can use the firm of your choice. All right, well, folks, hit me up on LinkedIn. Only insurance questions, please. And I appreciate your time and your attention.